Michael Burry, the hedge fund manager who famously predicted the housing market crash of 2008, is now warning of an even bigger financial crisis on the horizon. In an interview with Business Insider, Burry said that the next crash will be worse than 2008 and will change a generation. From the old saying, when it rains, it pours. It literally means that when a good or bad situation happens, another good or bad situation follows in tune. Since the beginning of the year 2022, there has been an economic downturn, most especially from the stock market. In this video, I'll explore what made Michael Burry so sure about the imminent financial crash in the past, what makes him believe that a greater one is looming that will change a generation, and how you can help safeguard yourself and your family from falling into any risk that will cost you all. The 2008 financial crisis, also known as the Great Recession, is no news to every one of us. The event was an eye-opener that everything cannot be rosy, and there is a need for us to always prepare for the worst. According to a quote by American investor Robert Kiyosaki, it says that while a financial crisis can be a horrible time for average ones, it is also a great time for professional investors. Looking at this statement on the brighter side, it is quite true. A recent example is the COVID-19 pandemic. While a lot of people were losing, a few other people gained massively. Elon Musk is a typical example in this context, as he eventually went on to become the richest man on earth, surpassing Amazon billionaire Jeff Bezos. Born in 1972, Burry began working as a neurology resident at Stanford Hospital and later as a pathology resident. He then transitioned into hedge fund management and began focusing on investments in distressed companies with great potential or value appreciation. During this time, Burry witnessed firsthand the effects of the 2000 dot-com bubble burst and the 9/11 attacks that led to economic damage in the United States, which was already suffering from a moderate recession. Burry has just recently claimed that the stock market, crypto market, and other assets are about to experience an epic crash. But the question is, how soon will these happen? Do you strongly believe in these bold claims of Burry? Let us know in the comments section. This isn't the first time Burry is making such bold claims. He has predicted a similar situation in the past, which eventually happened. But I am sure you and I won't want such a thing to happen, as we all know the consequences we could face. In the year 2000, Burry closed down his website, where he always advised people on the right choice of investment. He went on to start his own hedge fund named Scion Capital, and within 4 years, he was already managing a whopping $600 million. It got to an extent he had to reject money from new clients, so he had to have more focus on the investment deals he had with his current clients. Many people find it hard to start a business of their own. Do you wish to know how to go about starting a business you have always hoped for? Hit the subscribe button. I'll show you a step-by-step process on how to go about it. Burry has always been zealous about having his own investment company, and he studied a lot before getting to that stage. It was most of his studies that helped him in making wise investment choices and attracted more people to invest with him. Due to Burry's high intelligence in investment, he was able to know when danger was ahead. This made him always change his investment style whenever such was about to happen. When Burry decided to short the market due to his analysis that subprime mortgages and related bonds were prone to lose value, some of his clients weren't happy with his decision and pulled out their invested capital. Well, it wasn't their fault, as they didn't have the foresight he had. However, in the long run, Burry gained massively from his prediction, along with the investors that trusted in him. This shows that in some stages in life, accepting to take risks that people don't believe in can actually be a turning point for you. Burry's predictions have now made him become a popularly known figure worldwide. He has lots of followers on his social media accounts who are always keen to see his updates. Michael Burry is a great example of the importance of research and due diligence. He spent months poring over data and analyzing the subprime mortgage market before making his fateful investment. This careful planning and analysis paid off handsomely in the end. Burry's recently deleted tweet in September about the crypto market, meme market, and SPAC crashing shouldn't take you off guard. You can as well build on this and reevaluate your choices you make so as to not fall into any form of loss if any of these gets to a worse stage. You might think that the economic situation isn't getting any worse to cause a greater recession, but looking at the series of scenarios happening, you might be wrong. With the S&P 500 index reducing drastically, there is a need for you to take caution. One way to stay safe is to invest in companies that are less likely to be affected by the market downturn. Another way to stay safe is to diversify your portfolio. This means investing in a variety of different asset classes, such as bonds, real estate, and cash. By diversifying, you can minimize your risk and protect your portfolio from losses. When the stock market tanked in 2008, many people thought it was the end of an era. But as we all know now, that wasn't even close to being the case. The Great Recession was a blip on the radar for the market, and there are even more impressive booms and busts waiting for us in the future. So don't put all your eggs in one basket and stay diversified. Burry pointed to a number of factors that he believes are setting the stage for another major market correction, including high levels of debt, inflated asset prices, and complacency among investors. He warned that the next crash could come sooner than anyone expects and advised people to start preparing for it now. Burry likened the current situation we are with the December 2007 levels, and from his analysis, we are sure in a mess. Burry compared the present economic collapse to an overcrowded theater with just a small exit, and as investors rush to quit the market, they either crush on others or get trampled on. Other countries are taking a variety of measures to try to curb the dollar's increase against their currencies. Some are intervening in the foreign exchange market to sell dollars and buy their own currency, while others are letting their currency float more freely. Some countries are also raising interest rates to make their currencies more attractive to investors. Greg Jensen, co-chief investor of Bridgewater Associates, is one of the economists to have backed Burry's claim about the impending Great Crash. According to Jensen, it is very much impossible for us to go back to how prices were before the COVID-19 pandemic. With all the recent downturn and massive crash, Burry still claims we are yet to hit the bottom. How true can this be? If we are still going to see a more severe crash than what has happened, then surely we are heading to a greater crisis that would be worse than the Great Depression. The crypto crash, which saw a massive drop in price right from May, was caused by a perfect storm of events, such as the recovery from COVID-19, high inflation rates, the Terra Luna crash, the Russian-Ukraine war, and supply chain issues. All of these factors led to a decrease in demand for crypto and a consequent decrease in prices. The crash was exacerbated by the fact that many people had invested heavily in crypto in the hopes of making a quick profit. And when the prices began to fall, they began to sell off their holdings, leading to a further decline in prices. With all things being said, what exactly does this market crash mean? A market crash is a sudden and sharp decline in asset prices. It is typically associated with a period of panic selling and can have a profound impact on the economy. A market crash can occur in any asset market, but is most commonly associated with the stock market. A market crash is typically triggered by a sudden and unexpected event that causes investors to lose confidence in the future prospects of the market. This can lead to a rapid and dramatic sell-off of assets as investors attempt to cash out before prices decline further. Market crashes can have a ripple effect on the economy, as they can lead to a loss of confidence in the financial system and can cause a decrease in consumer and business spending, as well as cause businesses to close and people to lose their jobs. On the other hand, when a bubble bursts, the price of the asset plummets, often causing widespread economic chaos. Investors are typically the most affected when a financial bubble bursts. This is because they often have large amounts of money invested in the asset that has lost value. Non-investors can also be affected, however, as the economic recession that follows a financial bubble burst can lead to job losses, wage cuts, and a decrease in overall spending. With The Big Short movie ending with a puzzling line that Michael Burry is only focused on one commodity, which is water, this statement shouldn't get you thinking too much. It's just an eye-opener to let you know what Michael Burry has been up to and how you can leverage his trading methods into yours. You might say that how is it possible to invest in water, especially since the future market has been trading things like oil and gold? Well, don't be surprised by this, as water has just recently joined the trading market as well. If you don't act fast as well, you might be part of the many who weren't aware of the new development. Benjamin Franklin, United States founding father, once said, "When the well is dry, we know the worth of water." Burry's warnings should be taken seriously, as he has a proven track record of being correct about major market movements. His predictions about the housing market crash were spot on, and he is now warning that the next crash will be even bigger. This is a financial crisis that investors need to be prepared for. That's all for today, guys. Do you have any contribution to the topic discussed? Feel free to let us know your thoughts in the comments section below. Don't forget to hit that like button and subscribe to our channel for more videos like this. If you enjoyed this video, check out the next video.